Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Monday, the EURUSD pair consolidated above the resistance level of 1.1645-1656. which allow us to expect further growth toward the next corrective level of 38%, 1.1718. I'll remind you that the weekly decline of the European currency did not cancel the bullish trend, so buying remains preferable to selling for me. However, a consolidation of quotes below 1645-1656 would favor the US dollar and trigger a decline toward the 61% corrective level at 1.1594. The wave situation on the hourly chart remains simple and clear. The last upward wave broke above the previous peak, while the last downward wave did not break the previous low. Thus, the trend is currently bullish. Recent labor market data, the changing outlook for the Fed's monetary policy, Trump's renewed aggression toward China, and the ongoing shutdown all support bullish traders. However, the bulls themselves are still attacking sluggishly, as if they simply don't want to for some unknown reason. On the 4-hour chart, the pair made a reversal in the favor of the US dollar and consolidated below the 1.1680 level, which could lead to some decline. However, earlier there was also a consolidation above the descending trend channel, after a bullish divergence appeared on a CCR technical indicator. Thus, the upward momentum may resume toward the next 161 corrective level at 1.1854. Market movements are currently very weak, and we believe the hourly chart provides more informative analysis. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. On the weekly chart, the pound has been consolidating around the MACD line for 3 weeks without consolidating above or below it. At the current week closes below the MACD line, it's a blue line on the chart, at the level of 34.14. A bearish consolidation will occur. Thus, the pound task is to try to close the week above this mark. This task is quite challenging because the Marlin oscillator has been declining for all 3 weeks. And even if the price holds above 34.14, the oscillator may not have enough time to rise into positive territory. If it happens, the pattern from the week before last may repeat. On the daily chart, the price is struggling against resistance from both the MACD indicator line, it's a blue line in the chart, and the trade balance line, and the 1.3369 level, with no support from Marlin. The oscillator may only enter positive territory. This would be tomorrow. That's all for today. See you online soon.